So let's narrow that down a little bit, because emerging markets don't all move to the same drumbeat anymore. Where specifically in emerging markets?
Emerging Asia in particular. We'd steer clear of Russia for obvious reasons.
How about Thailand?
Thailand, I think the whole collection of Indonesia, Thailand, South Korea looks attractive. Generally good young populations, good growth, 4 to 5%. Inflation can be more of an issue there, but seems relatively contained. And then Latin America looks attractive too. Places like Mexico, Peru, Chile look attractive.
How do you factor in political risk? Thailand, for instance, that's why I brought that up. But obviously that is a concern in some of these areas that you find attractive.
Right, good question. So you've got to be aware of the currency is really a lot of the risk. So the first is stay diversified, is lots of different opportunities. So don't concentrate your emerging market exposure in any particular market, so own multiple underlying markets. Hedging the currency tends to be very expensive, so we would just reduce our weight to political hotspots where we think there might be some political risk. India has been a huge surprise this year, not an attractive market last year, up 13 or 14% this year, in part because the political dynamic has improved.
What are the biggest risks, do you think, for investors right now? We went into the year, everyone was worried about what was happening with the Fed and tapering. Then we had to worry about earnings with Q1. What are sort of the risks that aren't really being telegraphed that perhaps people should pay attention to?
Well, I think there's always political risk. Although I think the expectations by investors are so low about what happens in Washington, there's something to be said about managing expectations on the downside. I think it's deceleration in corporate earnings. Corporate earnings disappointing. Margins are at or near all-time highs, so there's not a lot of margin leverage to be had. So I think the big fear is deceleration of corporate earnings, and we're at multiples that are lofty enough that those disappointments could bring on equity correction.